Good evening, ladies and gentlemen. Welcome back to Walk the Block, where we're navigating digital finance altogether. I'm your host for the evening, Zenith, and I'm joined by my excellent co-host, Tracker. How you doing, buddy?
Doing well, man. As always, ready to dive into it, man.
Excellent. Yes, we got a good show for you here tonight. We are coming up on what is actually one of the more interesting weeks when it comes to macroeconomics here inside of the United States. That's right. Jackson Hole is going on. So the Fed is going out there to meet with people and talk. And there's actually a handful of crypto folks that are out there. We just got the agenda for the meetings tomorrow and Saturday released to the public. So we'll talk about what they're going to be talking about. And then we'll obviously have more next week when we actually get the results of that. Outside of that, we do have an announcement that there is an alliance of banks trying to launch their own blockchain where they're the administrators. We'll talk about the pros and cons of that. And then still probably the thing that is dominating headlines as we see a relatively significant uptick in the amount of interest in crypto when it comes to social media, YouTube, media, all that kind of stuff. Yeah, it's Bitcoin. It pumped. We actually just crossed the $81,000 threshold like while we were going live here. So got some charts breakdown. Still going to monitor that situation because I still do believe this is the foremost story going on in crypto because it has implications for the entire 4-year cycle. And if you're a fan of the show, you know how much we love talking about that. Alrighty, with that being said, let's go ahead and get into it. Number one thing on my desk currently, the price of Bitcoin. Yes, but it's not just Bitcoin. It's also a lot of other stuff. Like Ethereum is also having a nice little run here, but it is contending with this $25,000 level pretty heavily. But right now, let's start off our analysis with the focus on Bitcoin. Okie doke. So we are looking at $81,000 Bitcoin. What does that mean? Well, it technically means that we are still just a whisker below this candle that happened on the 25th of August, aka Tuesday. But we did just have our highest daily close in the recent history at about 80,250-ish. Now we're actually charting a little more upwards. Okay, how are the moving averages looking? We are sky high above all of them for where we should be in the cycle currently. 200-day moving average, that's our red line. That's our long-term momentum indicator. We are above that, which could indicate that times are changing and we could be entering a bull market, but we're going to have to get some more confirmation before we see that one. Well above the 50 and well above our 20-day. Those are our short and medium term momentum indicators. So it's showing momentum is definitely towards the upper direction. Our 20 is now above our 200, but the 50 is not crossed over there. Once you get all those indicators in alignment and stacked in the correct orientation where you have short, medium, long, and then the price is above it, that's how you know you're really in some good bull times. Not quite there yet, but as it stands, I kind of project that we could be there come 2nd, 3rd of September, depending on how price action looks over the next couple of weeks. As far as our 60-day cycles, we're currently on day 25 with a day 23 high. And because this move is pretty aggressive towards the upside, I happen to think that there's a good chance we could keep going towards the upside. Just because the way that this works, this move is very aggressive. There's tons of time left in the cycle, unless there's a massive rejection, which I kind of don't see happening because I feel like it would have already happened by now based on the aggression of the move. It shows that because we're kind of steadily climbing higher, these prices are actually sustaining themselves a little bit. We are seeing volume come in to support this, not nearly as much as we saw on those like first 3 real big green candle days. But outside of that, the next thing that we're really contending with is this level right here at about $83,000. This high from back in May is the target to beat currently. The reason that I say that is because if we can beat this target, then it means that we're punching through a resistance level. That resistance level has been set, and it used to be a support that got flipped into resistance once we had that really big drawdown back in February. So I know big news was when we had our massive drop back in October, and then we continued to chart downwards. But this drop right here in late January, early February, this was really the indicator that, yeah, no, we're going down for a while. And that this was one of the data points that really showed that the 4-year cycle appeared to be holding true. We had the high, we're going down. And then the relief rally here, shout out to our commenters in chat that called it exactly what it was when it was going on before we dropped down again. Yeah, if the relief rally failed, got up to that 200-day moving average, but then just dropped off considerably. And now we punched right through it. And as it stands, it appears that we've kind of broken an overall trend. Because if you do, little drawing on the charts, this red line, pretty much matching the 200-day moving average, is the downtrend that we were seeing. And because we punched through it with a little resistance, it kind of shows that there's a lot of energy in the market. Whether or not it can sustain itself is the next big question. As far as some more detailed technical analysis, let's look at the Fibonacci retracement. This retracement is drawn from our high in May that we were talking about, all the way down to the low that we experienced on the 1st of July. If you are a big fan of Fibonacci levels, you might remember that 886 level is a particularly important level. If you can close above that, odds are whatever move you're currently experiencing, it's very likely it's going to continue. And, well, we just closed the first day above it, but that's not a full daily close. So pretty much the next 24 hours are a very critical point when it comes to the Fibonacci levels. If we can stay above $79,000 and $79,600 Bitcoin, there's a very strong likelihood this move is going to continue. It might have to go contend with this 83,000 level, have like a try or two before it punches through. But based on the energy we saw in this one, if we have similar action going on, I would not be surprised to see that this RSI indicator continues to stay very much in this high green zone. That is our overbought territory. But once you can sustain time in there and really push deeper into that territory, that's where you see really big price moves happen. And that's kind of what we're talking about here, because once we get through that 83,000 level, well, the next real area that I'm looking at is kind of this 95,000 level. And if you want to look at the Fibonacci's, looking at 91. So if you asked me 3 weeks ago, would we see $90,000 Bitcoin anytime in September or August, I probably would have told you no with very high confidence. But this is crypto. Volatility is the name of the game, and this is what we're looking at. Alrighty, Tracker, any comments, questions, concerns?
Just to inject more, I just think that the way I'm looking at everything is we talked about we should see some more chop. Yes, we could hit this resistance level at 82,000, this recent top that happened back in May. It's got to get through that. But then if it does get through that, it's going to be hitting this next pocket of, this pocket of control right between 85 and 90. Like it's really, because it's, and just simply, if you want to zoom out a little bit more on the chart, just so you can get it, you can pull in the November time frame. Yeah. So the next leg, if it does get through this 82 level here, it's going to be running into this resistance right around 85,000 line, which used to be support on the leg down back in November, which was formed right around in November, and it went all the way across and got violated and broke down in January. So that section there, that pocket there, is going to be an area where it'll probably start to hit resistance if it gets up there. Regardless, I think the way you need to be playing this is watch the 82 level. If it breaks through the 82 level, then it's going to definitely go right on. It's going to jump right up to 85 probably, because it's filling that back pocket. There's probably not a lot of volume between there, because we just had that. We fell off a cliff in January, straight down, right through it. So I think once you get above 82, it should be clear sailing right up to 85. Then you're going to run into resistance, and then you could see some chop. Now, do we hit $82,000, $83,000 area right here where we're at now? Start to run into some resistance and then retest pulling back. And I think if we retest and pull back, I still like the 72,000, 73 to 72,000 pocket. I like that area there to be a great area to DC back in. If you get a pullback to that area, I don't see a big significant pullback. I think the damage has been done for the bears. That's my take. I'll hold true. Outside of a black swan event, there's just too much. There's too many tailwinds right now, and there's so many people that are bearish, and so many retailers on the sideline, and a lot of big institutions are on the sideline. I think the major players who've got control have just caught everybody off guard, and I think they're going to keep it pumped up. And now with the moves from the Treasury, like we talked about last week, it's going to hold up. It's going to be much more like we've talked about, risk to the upside than the downside now at this point. I don't see us going back retesting the 200 weekly moving average in Bitcoin. I just don't see that in the cards. I think what's going to happen here, based on what I'm seeing, we're either going to stall out at 82,000. If we break through 82, then we're going to go right on up to 85, and maybe chop between 85 to that pocket between 85 and 90,000. And then you're going to see a rollover and then retest, or we're going to stall out at 82 and then retest. The question here is, regardless if you go to 82 or 85, Where's the retest? That's going to show you how strong this is. You're going to get a rejection at some point. When we pull back, where's it going to do? Do we get up to 85 and 90, stall out, and then pull back and then find resistance back at this 82 level? If we were to go higher, do we stall out at 82 and then fall back about 50% down around that 72,000 range? Like, to me, the more significance is the pullback is going to be more significant than where we run up to, because you're going to get a pullback. And if you're on the sidelines, you're looking at DCAN, that's going to be your opportunity window if you want to get in. If you're 100% on the sidelines now, yeah, I don't know what else you're waiting on. If you're on that camp, but you think you're going to see 40,000 Bitcoin, like I said, there's going to have to be one hell of a black swan event to push it down to 40,000. And I just don't think market makers are going to allow anything remotely close to that. I think your opportunities were when we got down in the lows in July, and then that, like we talked about, that 200-week moving average. I think that 200-week moving average has so much support on it, especially now. I see there being a wall there, and if it does break down, it's going to be one of those snap one day, just drops and a snap right back. So I just don't see that happening.
Yeah, that makes sense. Looking at the weekly chart right now, I think that odds of us getting back down to that 200-week moving average, very low. It's possible, but maybe not in the current move. It would probably take 2 or 3 moves to get down there. I am looking at that orange line, though. That is our 50-week moving average. Notably, this is one of those indicators that we were looking at when we were trying to figure out, is it all over? And that was pretty much when we were here at this 105,000 range, dropped down to 98. And then we didn't close below it. But the next week, we closed below it. And since then, we have been well below it. So we're like spot on right now at this current price, because the 50-week moving average is $81,100. We're at $81,080. So again, very kind of like critical indicator that we're looking about going over here. But I think that there's more to this than just the indicators themselves exactly. So real quick, I do want to flip over here.
The macros, man. You get the macros involved that are feeding it good. The other thing, I know you're going to go to ETF inflows here in a second, but the other thing is we've been talking about this forever, right? What is the max pain? Well, max pain was not to mute, what we had to the top. It was very muted to the top, or very muddied as far as knowing when the top was really happening. If you stay true to the 4-year cycle, then you were golden. But now a lot of people have been on the sidelines. What's max pay now? Well, a lot of people are saying 40,000, 50,000 Bitcoin, 1,000 to less for Ethereum and other coins. Well, if they don't get that, you've just got a ton of people on the sidelines now that are trying to figure out, crap, do I get in? Do I FOMO in? Do I wait for this pullback that may not happen? You just produce max pain for anybody who's on the sidelines. So I keep using the max pain theory, because I'm seeing market makers, what is the most pain they can cause for people? And that would be max pain for a lot of people.
Yeah, I don't think you're wrong. We're talking like overall crypto cycle maximum pain, which is that we went all the way down to 57,000, or basically 58,000. And we stayed in that low 60 range for a while. There was plenty of time for people to accumulate or look at that and be like, yeah, we're under the 200-week moving average. Plenty of time to get into positions. Unfortunately, during this time, we actually saw a lot of people exiting positions. It's the great irony about market psychology and what is the optimal strategy. But overall, on a long-term scale, if the shadowy cabal, shall we call them, that got in at great prices wants to inflict maximum pain on the rest of the market, the best thing they could do is make the boat leave before everybody gets on it. And this recent move could be the start of that, because we were chopping around. Like, even myself was trying to figure out the 60-day cycles, see where the next low's coming in as maybe a good point to, keep DCing in for the long term, or even just do some short-term swing trading and stuff. Didn't really get that. Instead, we got that really big move all the way up to the 80K range. And like you mentioned, there's still a lot of people on the sidelines. And I'm not saying that the boat's completely left, but we're on the precipice of it actually taking off. Granted, like you said, there will be a retracement at some point. That's just how these markets work. What goes up must come down at some point. And how low it comes back down, that's really the question. Because if it can get up high enough, odds are we might not see Bitcoin under 70K again this cycle, or honestly ever, based on just how the markets move.
And I do want to give a shout out to Jay, because Jay got out on he stayed true to the 4-year cycle. He got out, And then he recently, because I don't know, our private telegram, he was texting, he was telling people like, I think I finally pulled the trigger and got back in. And I want to say he got back in. It was near these lows. He was, and his theory was, and it's correct to think, if you got out at the right time before it dropped, what does it matter if you get in back in around the $62,000 area versus if you got in at this 40,000? Now keep in mind, maybe didn't go all in with all powder, but still went back in pretty good to get that level back in there. And then, what I'm saying is that was a safe bet we kept talking about, was just go ahead and get back in, because you don't have to go on all your dry powder. You could have keep still 40-50% of what you had. And if they pull back to that, next leg down, you're prepared for that too, but you're protecting yourself to the downside and you're protected to the upside, which is exactly where you want to be. So that's where we're at. All right, what we got going with the inflows?
ETF inflows. We've actually had pretty good little stretch here. Granted, we didn't
Max
see
Payne. Oh, what was that chart you just had up there for a second? What were you on? What was that?
This is cryptocurrency liquidation max pain. Gives
That's
you a couple
funny. I
different
was thinking, I just think it's just ironic that we were talking about it and then you had it up there for Max Payne. That's hilarious. Okay,
you mentioned it, so I brought it up. I might have already had it loaded. Who knows?
Very nice.
But yeah, like currently on the 24-hour, 81. This actually just turned over. It was 80,600 when you were talking. Now that I'm talking, it's 81,000 pretty much on the dot. Let's see how the rest of the time frames look. 48 hours, same thing. 3-day, 80,005. The 1 week, 80,005. Let's go to the monthly, 80,100. So it's kind of indicating to me that maximum pain is pretty much where we are, because I think a lot of people are betting on it moving somewhere else, whether it's up or down. And the way that you can also visualize that, good old heat maps. Yes, these are currently the positions that are open. The brighter yellow it is, that means the more money is there. There's a lot on both sides. I'll say that. Currently, we're looking at like this 81,000, which we just hit. So that is looking like its price is moving up there, doing some liquidations. But there is also a pretty strong band everywhere from where we are right now down to 75,000, which one of those magic numbers you mentioned previously. Imagine that.
Right. That's what I'm laughing about, because we just talk about that, which makes sense on these, though. It does make sense, because if you did break out to the next leg up, you were going to hit resistance around that 80 there. And if you do pull back, you would pull back to that 75. I said 72, 73 area, but I get it. 75 would make sense if you're going to pull back, because people are probably looking at that as another point of control. But so max pain for this, that would it feel like is you get a push up to 85 and then a retest back down to the 75 level, 74 period. Now you just wiped everybody out. And the market makers are looking at this. They're looking at these liquidation heat maps and stuff. That's what they're looking at.
True. Speaking of which, another little map for you. We have open interest. So what's interesting to know is kind of the fluctuation in open interest. This is the amount of money that is on the markets that's doing shorts and longs. Okay, well, on the left you have your open interest amount, and on the right we have our Bitcoin price. Bitcoin price is the yellow line here, and well, it looks like there were a lot of people that were betting when we were still down in this 60K range. Now that we're up here, there technically is more money that is available to the market. But one of the ways that I like to look at this chart is I can kind of look at this chart in relation to how much does the open interest move in correlation to the actual price of Bitcoin. So if we go back, this is our October timeframe after we had the big old crash there. You can see that the open interest dropped significantly below the Bitcoin price, and that gap shows that there is money exiting the market when it comes to that. Now, when we had our final, the first of the final drops all the way down to 60,000 the first time, more money started coming back into the market, and more has gradually been coming in as well. And the biggest change is really when we hit these bottoms down in the last like 2-3 months. That is when more open interest has been on the market available for it. And as price is reflecting, it's moving up, but it's slightly less now. Again, this is pretty recent. This is very recent move, very recent data, so take it with a grain of salt. But what I'm seeing here is that we're getting pretty comparable levels to back where we were in May, when people were saying like, oh, rally, this could be it, stuff like that. Very similar feeling going on there. As far as not people betting, but people actually making investments, let's talk about the ETF inflows. So are these good positive inflows? Yes. Do they completely make up for everything that's been going on in the last 90 days? I would argue no, but the technical answer is just barely they are making up for it. Over the last quarter, we are up about $500 million. Keep in mind, we're talking a very large market here. So, like last month, we were up $5 billion, but for the quarter, it's only up $500 million effectively. Overall, we're not seeing the massive inflows like we saw pretty much the 18th and 19th when we had the big move upside, but it's still continuous volume coming in. And this, in my opinion, does explain why we've seen the price continue to just grind towards the upside. If this truly were like chops, like sideways chop, I would expect fluctuations both direction, but it's really fluctuations towards the upside. So,
Well, I
go.
wanted to say something, Zenith, though, because I don't think you have to have that much inflows coming in now because the fact that the market caps have gotten so depressed and low. So it's much easier to
Correct.
push this up because so much is already left. I mean, I don't know where the market cap was before this move, but I mean, I want to say it was what, 2.5. Right now we're at 2.8 billion is where we are in the entire crypto market. So it can't be, it had to be, I mean, well, I'm going to say 2 trillion. Did we get down to 2 trillion before this move?
We got all the way down to 2 trillion on the very, very
Okay.
end of the dip down here. We just barely crossed over that threshold to like 1.99 and change. But yeah, never really meaningfully dropped below 2.
Right, which is incredibly low, right? Because you talk about, I know we always talk about crypto is lap because we always joke around with the silver market, right? How big is the silver market? Which is tiny. Silver market's pretty small too, but crypto is smaller than the crypto market. It's much smaller, especially now that silver and gold have rallied. And of course, they also did. On a side note, they performed really well once the Treasury came out and stated what they were going to do because I mean, hard assets are always going to do really well. Yeah, here we go.
Yeah, silver currently sitting at about 3.9. So, hey, crypto's rivaling Amazon right at that 2.69 trillion.
Just shows you how tiny it is, man. It's ridiculous. I mean, we're talking, we are at 2.8 trillion in the market right now. So that's still like a whole trillion less than the silver market. That's crazy, man. That's nuts. Interesting. Okay.
Yeah.
What about switching over to the Ethereum charts?
We can absolutely do that.
So, because the Ethereum chart to me is more interesting. I just find it more interesting because how long it's been under that 200 weekly moving average. It's trying to get back over it. It is trying, man.
Critical point right there. Yes, $2,500 for the 200 weekly moving average.
Unlike Bitcoin, though, it has already surpassed the recent high that happened back in April and May when Bitcoin's trying to fight it. Ethereum's already passed it, or it's just above it, we'll say. So it's already somewhat captured it, not by much, but it's definitely captured that. So to me, there's more of a trend reversal in Ethereum, but even then I still need to have more confirmation to know that a trend's changed than just that. But I'm just thinking I like the Ethereum chart better just because you've had in June you had a clear double bottom. Now, don't get me wrong, in February, you had a double bottom as well. So I'm not trying to say, but you've had a clear double bottom, now a reversal, and you've gotten back over the recent highs that happened back in April. You've already surpassed it, and you're trying to get back over that 200-week moving average. So some cases, Bitcoin's chart looks better, and in other cases, Ethereum's chart looks a little bit better too. But
yeah, structurally they're different because of that level from May, like you pointed out. That's actually a big thing to contend with because that was your previous resistance level. If you're above it now, well, that means you're able to break the resistance. We have confirmation on Ethereum, don't have the same confirmation on Bitcoin.
Yeah. I know there's some people, but there's theories going around out there that, could you potentially see Ethereum pump while Bitcoin doesn't? That would definitely throw everybody for a loop if Ethereum were to move more over Bitcoin. And we talked about that possible narrative. And then on top of that, could the crypto go up when overall markets could go down because they have been decorrelated. They have not moved in the same manner. They definitely been acted different. So these are just some of the theories going around that we've been seeing people talking about, but it has to be proven before we can even take that. It's just pure speculation.
Yeah. S&P 500, by the way, looking like it might be contending with this 20-day moving average. So if it can hold that and then push above, we could be talking about new all-time highs next week. That's not outside of the realm of possibility. But the greater point, like you mentioned, is that crypto has been decorrelated from this stuff for a while. To your previous point about Ethereum versus Bitcoin, I think that saying that if I don't think it's super likely that Bitcoin would be dumping in a time that Ethereum is pumping. I think it definitely is entirely possible that Ethereum could, like, both can go up at the same time, but Ethereum can definitely go up more. We have seen this effect numerous times over, especially when it comes to smaller cap coins. Granted, Ethereum is still a relatively massive cap coin, but Bitcoin is just the one that dwarfs them all. But still, at the same time, it's not outside of the question. But in general, because they're number one and number two, they are kind of largely tied together. So we usually see these moves. Not saying it's impossible. I'm just saying it's less likely.
So on Ethereum price, I was looking at, I still think you could get up to, say, you could get up to the $2,600-$2,700 range for Ethereum, which is going to bump right up against that. Well, ultimately, if you're looking at the recent low, yeah, right there, the bottoms that happen here, you're going to run into major resistance right around that. We'll say 2,800, maybe a little sooner, 27 to 2,800. You're going to start running into resistance problems there. But if you got a clear breakout here, like, there's nothing holding it back right here. Because I bet you if you looked at the volumes at this price level, it just had a huge gap down. So you're going to have a huge gap back up to hit that resistance. I can totally see Ethereum pump up to that level, get rejected, and then come back down to do the retest, just like Bitcoin. But Ethereum has already gotten over that key level, like Bitcoin is still trying to get over. So it's going to be, that's why I say Ethereum to me is a little more interesting, just because of that case. Like, it's already made the move. I'm just curious.
I hear you. I'm right there with you. So if you want to get real granular with it, it was $24,600 or $22,460. Ugh, too many zeros. And we didn't close above that until pretty much today/yesterday. So you could honestly argue that, like, the candle we just had print over the last 24 hours is the confirmation that Ethereum is more than likely going to those higher levels. And if that's the case, well, then Bitcoin can probably chop sideways / slightly up for a little bit more, and Ethereum can run a little bit more and start to contend with these levels. Because yeah, the ultimate wick, $2,620, and then the next two above that, pretty much our final drop before the plummet, that's 2,780. These are definitely some levels to watch into the future. They do correlate with some older data, but keep in mind that the older data does technically get pushed out just due to the way that the orders fill between buys and sells, and then it'll clear out stacks and rebuild the stacks. So that's what we're looking at.
Yeah, we're like we talked about last week. We're already in extreme overbought territory. I know we had a live stream with our members on 2 days ago with our members. We were talking to them about it, that, we are in our extreme overbought conditions. You're going to get a pullback. It's inevitable. Like, if you look at the history of Bitcoin, look at the history of Ethereum, and when these trend reversals start to happen off the bottoms, you do get these big pumps, but then you also get some sideways, a lot of chop action with maybe a little blow off top, but then always a retrace. It's inevitable. It's going to happen. It's just that, how deep is it going to be? That's the big question. And that's going to tell you how strong this move is, how big of that, or how quickly it gets bought up as well, is another thing that's going to tell you how much legs this thing's got. I will say this, though. The other thing that's interesting is you're seeing I'm seeing a lot of pockets of action in altcoins, a lot of pockets of action. So Ethereum's making these moves. Obviously, it's ringing the dinner bell for alts. Now now keep in mind, the altcoins that are out there have been just bludgeoned. You could you're getting things for pennies on the dollar. Literally pennies on the dollar. We're talking stuff that's down 99%, 95%. So if you're putting anything in at these crazy suppressed levels, you have a great entry point. And if you've got nothing but time, then you can get. Now the key is picking the right ones. That's what we've been talking with our members on, picking the right ones that are out there. And we're going to talk with members, but the whole thing is, the thing to look for here is really you want to stay with stuff that's been proven through many bear markets, these altcoins, and they might be really suppressed, but they have lived a while and they've made it through here. But we're seeing pockets in the GameFi area. We're seeing pockets in other coins that we're seeing out here. I've already seen moves that are in the X's already. Now, keep in mind, these things are so bludgeoned, but some of these GameFi tokens that I've always watched on it, they're making those same moves. they're starting to make these moves. Now, these are just little, I kind of consider these like little warm-up moves. I wouldn't be diving in here and picking up anything at these levels right now unless you have huge convictions, but there are some that are really starting to show some signs, some big signs coming off the bottoms. I know we talked about the pulse chain ecosystem last week. There's already been a few coins already hit 5Xs since the bottom of July or the middle of July lows for that. Like, keep in mind that was ahead of the game before Ethereum even moved. So that's a little different, but you are seeing some X's already starting to get generated across certain areas. So you're getting a little taste. It's been a long time since we've seen some nice little X's like this popping up here and there. So it's nice to finally see it waking up. I just think I keep going back to how hated crypto is, because I remember seeing the reactions online with everybody seeing the Coinbase commercial during the Super Bowl and how everybody's booing it and throwing them at it. Like it just shows you that the sentiment is so low right now. Nobody wants it. But something interesting I started noticing in the mainstream, like something on like CNBC. You're seeing articles now posting that, these are like the first articles you're seeing on the main screen, right? Bitcoin hitting 80,000, momentums are starting to really change in crypto. So mainstream is certainly seeing it. That's going to entice retail or get people's attention. But now the big $1 million question is, everybody who's on the sideline, like we talked about earlier, is, do I get in now? Do I wait for a pullback? Or do you keep listening to what a lot of, and I know it's been true. There's a lot of big influencers that keep saying we're gonna be another big leg down. We haven't hit the bottom yet. Don't fall for this fool's roast. But here's the thing: if most people are saying that, then it's not going to happen. Something about when it comes to markets and it comes to everything, if the majority feels that something's going to happen, it never typically happens. It's always you got to take the contrarian's viewpoint or the least favorable viewpoint. That's why I keep going back to what's going to be max pain. Max pain would be what we already talked about. You're not going to see a big significant pullback. Like if you could see Bitcoin get back down to 74,000, if you're on the sidelines, I would consider that a gift. If it got down to low 70s, I would be backing up. Personally, me, I'm not giving, obviously not financial advice, but I'm just saying I would be loading up the truck because I don't want to play around with this game. You're getting very dangerous right now to be the things to leave. Like you talked about, train leaving the station or the boat leaving the dock. You're don't try to be a hero and pick the bottom. You should already have been getting in at different levels here. These certainly since, I mean, heck, if you were buying back at DCA back since February, you should be very happy right now. If you've been DCing in, if you got out at the top and you picked the top and you've been DCing in ever since February and just dollar cost and average in, you're looking very, very good. Not only did you preserve your capital to the downside, but you now are already in the green with all your positions you put in. You're in a fantastic position right now.
True.
Even if we do go lower or go back and retest these lows, you're still in a great spot. So,
oh yeah. I agree. Alrighty, tell you what, let's switch it up a little bit and talk about the news. So, first up, obviously, Jackson Hole's going on. We're going to have more information on that next weekend, but there is a fun little narrative that was going through the news this week, which is like the bank, the government is meeting in Jackson Hole, but at the same time, the banks and the government are still doing interesting crypto things as well. So, up first, we got this one. 39 U.S. bank groups unite to launch a $21 trillion blockchain by 2027. Okay, let's see what they're doing. 39 state banker associations across the U.S. have grouped to build a shared bank-controlled blockchain network intended to carry tokenized deposits, regulated stablecoins, automated settlement, and programmable payment tools, with a coalition to bring it online sometime in 2027. The group is calling itself Bank Chain Alliance. They made the effort public on Tuesday and framed it as an attempt to keep the next generation of payment rails inside regulated banking perimeter rather than leaving that ground to outside technology providers. The alliance says the network will be industry owned, industry designed, and industry governed, and that it will be built on a common blockchain platform. According to figures published by the group in its announcements and reproduced across trade coverage, the 39 participating associations collectively represent over 3,000 banks that hold a combined $21.8 trillion in assets. That figure describes the balance sheets of the represented lenders, not the value of the proposed network or of any assets that would move across it. Alrighty. So at a glance, we got banks trying to launch their own blockchain. I I believe I alluded to this on some previous streams where we were talking about like, okay, it appears that banks are kind of fighting the whole Clarity Act less. That means they may have a plan forward with something. And I propose the idea that why wouldn't they just try to make their own blockchain? And well, they're trying to. I will say, notably, that it was omitted from the article is the name of any major banks that people really recognize. Like, I don't know, JP Morgan Chase, Bank of America, stuff like that. That kind of tells me this is definitely on the lower end of things, especially considering like $21.8 trillion for 3,000 banks. That roughly equates to not a ton. It's roughly like $100 billion per bank. And that's, let me double check my math on that actually. I want to make sure I'm not talking out of my butt on this one. So if we're looking at it, let's see, 21 trillion divided by 3,000. Yeah, that's $7 million a bank. That doesn't scream big players to me.
Well, let's take a look here.
I guess
it could be a lot of it certainly could be a lot of the smaller banks that are kind of correlating together, trying to group together. Yeah, it says right here, no major large central banks are currently listed. So yeah, so it's a small alliance, even though there's a lot of banks involved, but it's definitely a smaller group. There's no big large banks that are involved. Yeah, the biggest. Yeah, see, it's, and we've already talked about it. The big ones out there have already started working on their tokenized deposits, blockchain networks. Like they're already working on it, right? Through the clearinghouse. Like they're already working on all that stuff. So this is just another one. And if you think about it, the smaller to mid-sized banks have always fought the centralized banks because really the centralized banks tend to eat up a lot of the smaller banks. So as a consumer, you want these small and mid banks to function. You don't want them all centralized like the large banks. So it's good for the consumer. It's just that they've been getting eaten up. So they're trying to compete. Obviously, it's an interesting thing to follow, certainly. But going back to what this whole thing's about, and we talked about it in the green room, was that they should be trying to look at every possible scenario before they make their decisions. Like this is to me as part of like, hey, let's research and see what this looks like. Oh yeah, let's also talk with other chains that are out there to see could we potentially partner with these. Like they already have the technology, why won't we part with them? It's kind of like a bank is not going to go out there like, oh hey, let's form our own security protocol with another, and think they're going to work with people who are already in the industry that do this. And I feel like that's what they're going to do too. They're just trying to, they're just trying to figure out what options they have out there before they decide what they're going to do. I think it's interesting they're thinking 2027. I call BS on that. I don't see 2027 in the cards. There's too much involved here. If they're just starting to talk now, does it in the article talk about when did they start these conversations? When did they start doing analysis on this and research? Does it say anything like when did this discussion start?
They announced the minimum viable product March 2026. That's really about it. It looks like.
Yeah, I'm just doing some research here. I'm just trying to see if they've started talking about this anytime soon. Yeah, public announcement, obviously it was now. Internal discussions began roughly between April and May of this year. So yeah, no, I call BS on the 2027 Sorry, ain't happening.
Yeah, I hear you.
It's not going to happen. Now, let me back it up. Could they launch a chain? Could they do some
beta testing?
I'd say more like alpha testing, but
realistically, yes.
I don't think people realize what's entailed. This is like trying to, even though these are small banks, you have such a huge number, and you have to think, are they all standardized? Are they already on like a standardized protocol already that they're all connected to? They're all it just how standardized are all these banks with the way they act now? Because that, if not, you're talking, people think this is an easy thing. It's like trying to do a U-turn with an entire fleet, a naval fleet. This is not a simple task. This is very challenging. A lot of things have to go right and a lot of things have to be determined. And who are they, like, does it talk about who they're working with? That's the other thing.
Doesn't really say so. Da, 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 da.
I just there's so much that goes into this, man. And then you got to get into compliance. You have security officers that have to be involved in all this. They have to bless
Correct.
everything. You have probably certain certifications that have to. Yeah, there's no way this is happening in 2027. Sorry.
Gotcha. I will say
Optimistic.
this is kind of the tongue-in-cheek part, but I would like you to point to the diagram and tell me where you would place this news story.
Oh, innovation adoption curve. At best, late majority.
Oh, really? I was going to say this could be early majority, maybe towards the back half of that.
The early majority. I would say not early, because think about it. You've had a lot of the big banks already been talking and discussing this for a while, like years ago, trying to figure out certain protocols. Like, are they going to have an open network, a closed network? The different, there's been a lot of discussions around this for a while now. And keep in mind, here's why I say it's more late, because you already have banks and others already tokenizing on certain blockchains already now. We talked about real world assets that are already tokenizing on the Ethereum network, on Solana, on Binance, so forth. I mean, there's already tokenization already happening as we speak. They're trying to figure out what chain are they going to go with, right? You already got people already moving forward and tokenizing and already figuring this out, trying to get ahead of the curve. Hell, you already had the NASDAQ and the Dow saying they're going to tokenize this. What did they say? Into the year or something like that, in the next year or something? They wanted to tokenize everything. I'm just saying, I think they're definitely late. These guys are definitely late to the curve when it comes to that.
As far as banks go, this is definitely in either of their majority camps for me. But as far as the overall crypto space, yeah, I think these guys might be a little late to the game when it comes to actual building, because there's so much infrastructure that's been built at this point that we're seeing chains that are trying to become like major L1 chains, or even previous major L1 chains that have just died and become old and irrelevant. So if we're already in the part of the cycle where we're kind of seeing like a death lead to new rebirth, yeah, I'd say that we're getting pretty decently into the whole lifespan of this thing going on.
Well, think about it though. We always make this analogy, right? This is just like .com bubble all over again, right? You had a lot of company, a lot of money thrown at stuff. A lot of stuff went under and failed. But what happened during that? What came out of the rubble were the strongest ones that came out of it. And I feel like you're in that stage now. We're coming out of the rubble, and you're already seeing who is going to start leading. Now, some people will look at that. That was a lot of wasted money and a lot of just money thrown away. Yeah, probably recklessly. Sure, absolutely, trying to stay up with the Joneses, and I get that. But what it did do is you learn what not to do, right? There's a lot of value there. And okay, that didn't work. So and so did that. This chain did this. They did that. You've kind of seen so many different experiments that have gone on to where you have a really good test case on what will work and what won't work, or a pretty good idea what will. And looking at this, like they haven't. So I'm looking at this now. It says now the Bank Chain and Alliance is still choosing who will build the underlying technology. So you haven't even got to the drawing board as the client working with the people who are going to do the work. You don't even have requirements yet, as far as I'm concerned. I've been down this rabbit hole in technology. Trust me, this is they haven't even brought somebody to the table yet. So 2027, that's cute. It's not going to happen, but it tells you at least what they're trying to look at and do. I think what will end up happening, if they're smart, they would go off of a chain that already has something in place that they could potentially look at. Now, if they're trying to be more of a private chain, more, not full just transparency and have it more isolated, then yeah, you might need to do something like that. But we're already seeing pockets of technology that it's already allowing you to do that with a ZK it's not the ZK rollup, but what is the technology we're already seeing now that can hide transactions and things like that? We know the technologies already exist.
Zero knowledge proofs.
There you go. Exactly. So that's already happening. It's just that the problem is at the tip of the spear with technology, the adoption of that new technology, especially to large institutions, takes a lot of time. It does, because there's a lot of moving parts. People think, well, why don't you just implement that? Well, you could implement that, but now you have to have certifications in place. You have to make sure that you're meeting certain regulations with the committees. You're making sure that your partners and your customers are aware of these changes and they accept these changes. I mean, the legality, it's just, there's so much stuff you got to do. It's not just like, oh, just implement it. It's not a mom and pop shop. These are mainly banks with many customers and many regulations scrutinized that they have to meet.
True. Alrighty, on to the next one here. President Donald Trump ends the war on crypto at his White House summit and pushes the Clarity Act for a vote. All right. Well, on Wednesday, we had the summit. The president at the White House had a gathering of top crypto and finance industry executives ahead of the CFTC's Innovation Advisory Committee that happened today, by the way. The Clarity Act will finally get its Senate vote in September. More details on that later. But regulators are getting a head start on cryptocurrency directives while Congress is out on recess. The SEC on Tuesday proposed a new crypto offering rules and exemptions after the Treasury Department earlier this week sought input implementing the Genius Act. Keep in mind, we passed the Genius Act in, I want to say, July of 2025. So way to really get with the times, guys.
That's the government. That's the government at work right there. It takes forever for anything, right?
Yeah. Quote, we're focused on creating a clear regulatory framework for pioneers and builders like the people that are here with me so that they can do business with confidence on American soil, said President Trump. We're ensuring America remains the undisputed leader, not only in Bitcoin and crypto, but also technologies like prediction markets, artificial intelligence, and so much more. Speech noted the CFTC is working to bring Hyperliquid, a crypto exchange and infrastructure provider, to the United States. We need for Congress to take the next step and pass the Clarity Act, a fair version of the Clarity Act, Trump added, calling it very powerful market legislation. Trump and Selig both touched the administration's crypto-related efforts, including passing the Genius Act and executive orders. Selig also noted the importance of making America the compute capital of the world and the necessity for protecting prediction markets. Alrighty. I'm going to be honest with you. I have read through this article, and it's a lot of just hubbub that we've been talking about, honestly, for pretty much this entire calendar year. Ever since the Clarity Act was proposed, or actually went to mark up in the Senate back in January. I know it's been that long. I can't believe it. But here's kind of the juicy bit out of the article right here. Date set for Clarity Act vote. Senator Loomis announced a Senate vote for the Clarity Act scheduled September 15th at 2 p.m. while speaking at the Wyoming Blockchain Symposium co-hosted by Salt and Kraken. That happened last week, by the way. Senator Thune was kind enough to actually schedule the bill for September 15th, no less. Loomis, who serves as chair for the Senate Banking Committee's subcommittee on digital assets, quote, we have not only a day, but a time, so we will move forward on that date and time. As of right now, the Senate failed to reach a compromise on the Clarity Act and delayed a vote on the digital asset market structure bill until after the August recess. Cool. All right, we have a vote. Quick question. What kind of vote is it? It's actually a vote for cloture. So for those that don't speak government like I do, cloture is a procedural vote that is used to close a filibuster. It, again, requires the 60 vote benchmark to actually close for cloture, but it's not the final vote that happens on the floor of the Senate. Granted, this one does also happen on the floor of the Senate, but different in kind. I know, really splitting hairs on this one. So, is it cool that it's on the calendar? Yes. Am I really hoping that kind of rule number one of politics applies here, which is don't vote on something unless you have the votes? I do. And this actually gives me some confidence because of that idea right there, which is that if you're actually going for a cloture vote, which has kind of been one of those things that holds up so many bills in the Senate, which is that whoever has the majority typically doesn't have over 60 seats. So they're trying to get confirmation that they have the extra few votes from the other side of the aisle that would be necessary to get over this 60 vote minimum for things. This is actually a pretty big deal. A lot of the stuff that's been passed through the Senate are things that have been passed through having a previous bill, say for this next bill coming up, for whatever reason, like it's a budget bill, financial or whatever, we're not going to have the cloture vote. In fact, we only need a simple majority to pass it. Fortunately, this is not in that kind of stuff. This is separate. We have to go through a standard process. But at the same time, getting on the calendar is actually a big deal because we really haven't seen, we've been waiting for things to get on calendar since January. I will reiterate, it was like January 21st or something around that time frame when we finally got proposed markup for the Clarity Act in the Senate Banking Subcommittee. And then we didn't actually get the results of that until like May. And then since May, we didn't get the final final version of the bill, and we still haven't gotten it. By the way, we've seen proposals, we've seen negotiations, but we haven't gotten the final language. So the fact that it's on there, it gives me hope. But at the same time, it's not guaranteed. It's not set in stone. But I will say it is the juicy bit from this article.
Well, like you stated, if they get the 60, is it? I mean, let me ask you this: it's not a formality. They still have to vote, but if they can get past the filibuster, then they essentially they know they got the votes. Thus, they're probably going to get it passed. Is that correct?
Yeah, that's what I'm going
Most
on.
likely. Okay. But here's the other thing. If I'm one of the, because I think mainly they got all the Republicans for it. If they have any of the Democrats that are like on the fence that they've been trying to swing, I know Governor Warner and a few others that, that they're trying to get. If they get those guys in on it, then you know what kind of back end deals they're probably getting, because it's real simple. Like you're running, when you ran your campaign and get anything, you have your voters, there's certain things you're trying to get passed, right? That's just your opportunity to swing over, get this thing passed, and get a lot for whoever your voters were to put you into power, or your, whoever you got to appease, that you have to be as your area. You have your agenda you're trying to get accomplished, so you can get these kind of things kind of greased and done as well. But here's the thing, though. I think the fact that now, if I'm on the sideline and I'm in that predicament, I do want to come over because I want to at least get that for my district or place that I'm representing. I want to get those things passed and in place, because this opportunity is going to pass, because I know right now they already come out saying they got the SEC as plan B in the back room. So it's like, if you have a chance to take this advantage, now is your time. If you let this not get passed, they're going to go right to the SEC, and it's going to go through regardless anyhow. So that's how if I'm playing politics, I'm looking at it like that.
It's funny you mentioned the SEC, because as the article mentioned, they did deliver a proposed rule when it comes to crypto market structure. And by the way, it is publicly available. So this is the SEC talking about regulation crypto assets. And here we go. I'll give you the summary and then a little bit of the introduction, because I'm not saying this is the better alternative. I'm actually saying this is almost a threat.
Well, the reason why I'm glad you bringing this up, because I think what everybody needs to understand why this is important is, if Clarity Act gets stalled out, the president and the SEC has already said, okay, fine. If you guys want to fumble this, that's fine. We're going to go ahead and move forward with clarity. We'll get clarification in the SEC, so then that adoption can move forward, because they'll have it basically guidelines in place, even though it won't be necessarily law because a new administration come in. But this is basically a way to get things moving along and not have the Clarity Act hold up. Basically Clarity Act almost filibustering the adoption with crypto in certain areas.
True. Alrighty, let's get into this. The SEC is proposing new rules to create a tailored offered regime for certain investment contracts involving crypto assets. The proposed offering regime is intended to facilitate capital formation and accommodate innovation within crypto asset markets, while at the same time ensuring that investors are adequately protected and provided with the information they need to make informed investment decisions. The proposed rules would be set forth in a new regulation titled Regulation Crypto Assets. It would include 2 exemptions from the registration requirements of the Section 5 of the SEC Act from 1933. The first exemption would permit offerings up to $5 million during a 4-year period. The second exemption would permit offerings up to $75 million during each 12-month period. Under both exemptions, the issuers would be required to make certain principles-based narrative disclosures available to their investors. In addition, issuers under the second exemption would be required to provide financial statements and would be subject to ongoing reporting requirements. Issuers that rely on these exemptions would remain subject to the anti-fraud and anti-manipulation provisions of the federal securities laws. The proposed rules would also include a confidential safe harbor from the term investment contract in the definitions of security in the Act of 1933 and 1934. The conditions of the proposed safe harbor are satisfied, then a crypto asset would be deemed not to be subject to an investment contract for the purposes of those definitions of a security. Alrighty. Apologies for putting everyone to sleep there, but we got a few things to talk about here. Big thing that kind of gets me a little concerned is we're going back to what is the definition of a security. If you have been following the legal proceedings about crypto for the last 5-6 years, this has been the central crux of everything going on. Is it potentially a good thing that we're getting a more clear definition of what a security is for crypto assets compared to normal securities contracts or security assets? Yes, it could be, depending on how it goes. This is a rule. If it goes into effect, the real clarification you're going to get is through a court. After how I've seen crypto treated in the courts over the last decade, effectively, I'm not thrilled to go fight that battle again, even though I believe that we are technically right. I just don't think that the infrastructure of the United States right now fully understands what crypto is. And especially under the previous FCC, they were trying to shoehorn it into the old securities law when it very clearly does not. So we'll have to see how this one goes. The exemptions, pretty much just basic exemptions for doing startups and stuff like that, and then also running a small size effective company that just adheres to basic information releases about your earnings and what's going on with the project. Pretty basic stuff. The thing that does concern me, if we scroll down a little bit here, comes from when we get to the introduction. So I'm going to skip a little bit here. Since the advent of Bitcoin in 2008, the crypto asset markets have grown significantly. Although still only a fraction of the size of the global debt and equity markets, the rapid rise in market capitalization of crypto assets is one of several indicators of growing importance of crypto assets to the global financial system. Despite this growth, the Commission has not to date adapted its rules to address the unique aspects of the crypto asset markets. Instead, the Commission generally has looked to the test developed by the Supreme Court of the United States in SEC versus Howey, known as the Howey test, to determine whether crypto assets and transactions involving such assets fall within the purview of the federal securities law. If the federal securities laws applied, an issuer was required to comply with existing requirements. Although relying on familiar, well-established legal standards in lieu of tailored rules has some merits, this approach has two primary drawbacks in the context of crypto assets. First, it can be difficult to apply the Howey test to crypto assets and transactions involving crypto assets. Second, the Commission's existing rules are not fully, quote, fit for purpose with respect to covered investment contracts. Both of these issues stem from the unique attributes of crypto assets. For example, although crypto assets may be subject to investment contracts, when first offered or sold, the crypto assets may subsequently cease to be subject to investment contracts. The Commission's existing rules generally do not contemplate or facilitate this type of evolution. Further, many of the Commission's existing rules require issuers to provide disclosures that may be relevant to investors in covered investment contract offerings. At the same time, those rules do not elicit other types of disclosures that are likely to be material to such investors. In addition, the value of a crypto asset often depends on the extent to which crypto asset is widely held and used. That is, the crypto asset's network effects. The Commission's existing exemptions have features that may impede such networks. For example, securities issued pursuant to the Commission's existing exemptions may be restricted securities or otherwise subject to resale restrictions. Those exemptions also may limit the extent to which an issuer may sell securities to retail investors, which could result in concentrated holdings. All right, translation to English. Howey test bad. Howey test does not work with crypto, yet we still tried to use it anyways.
Can't. This is the problem. This highlights so many things. A, how outdated the government is. Two, they're trying to use something that was created in 1946. Keep in mind, that's 1 year after the World War II. Just to put that in perspective. They're trying to use something. This is before computers were even being used. This is before digital, the internet, anything that's relative to the digital world, I should say. And they're trying to apply this. It's comical. And this also tells you in something else how disruptive the crypto technology is. Cryptography, blockchain technology, and everything, because this just shows you how outdated the financial institutions are, the banks are. This just magnifies it. We're moving into the internet and technology has basically transcended everything you could think about in the entire world at some shape or form. The financial sector is the last remaining one to get changed, and you can see how outdated this is. This is like trying to talk, and I'm no disrespect to boomers out there, but this is like trying to explain crypto to boomers that don't understand anything because they're not involved in this. It's very tough. These are so dated. They have got to get with the times. And here's what they need to understand. The United States, we've been talking about this for a while. United States needs they keep saying like how we're going to be the world leader in crypto. Well, guess what? You need to hurry up and get your crap in order, because else there's a ton of other places that are going to be doing it. I can tell you right now, places like Dubai, China, certainly, India, most of your South American countries are about fed up with inflation. They're more adopted to crypto than anybody. What I'm saying is they need to start moving quicker, a lot quicker. And the United States is definitely further ahead than the euro. I mean, Europe, the EU is so far behind. I don't know where to begin with them. They're lost as far as I'm concerned. No disrespect, people who live in there. It's just that they have such a control with the EU over there. It's disgusting. And the way they're going more extreme. They're going much more extreme in the financial industry. So anyhow, long story short, the way I'm looking at it is this, is that they've got to upgrade it, and the Howey test ain't it. They've got to come up with a new thing. So is this new SEC, are they going to try to come up with new regulations, new standards that can actually be applied, and stop trying to use outdated tools for something that's completely new? Like, or is that all you got out of it? They're going to try to use the Howey test.
So this is where the big difference between Congress passing the Clarity Act versus the SEC trying to do their Clarity Act. The issue with the SEC is that they are an existing federal agency. They do not have the ability to create new laws. Congress does, meaning that Congress can create new and novel laws. The SEC must operate under the guidance of existing laws, however they see to interpret it. That cuts both ways, by the way, meaning that we're currently in a very favorable crypto period, which is that we got a lot of good information coming out of them. Back in March, they released an interpretation that sorted tokens into digital commodities, collectibles, tools, stablecoins, digital securities. That's good stuff. That could go away the second a new person is at the head of that agency. The reason that they have to do this is because it's their interpretation of existing laws inside of existing case law from previous court cases that have existed on the old laws. All of this is all circumnavigating the existing laws on the books, which happen to be the Securities Act from 1933. So I'm just saying crypto doesn't exactly interact well with that kind of stuff because it just doesn't fit the same thing. Yes, we do have some progress from the guidelines and regulations that the SEC has put out, but I'm saying it's not permanent, and it's built off of the old stuff. You have an opportunity with the Clarity Act through Congress to pass new tailor-fit laws for crypto. That is really the big win here. Does having some basic market structure that is favorably tailored to crypto help? Yeah, absolutely. I'm not going to pretend that it doesn't. But I think there is a night and day difference between being stuck in the old system and trying to build on that, or building something new that's tailor fit for the issue we're trying to see of the day, which in this case, it happens to be crypto and just basic market structure.
No, that was well said. That was well said. I think, and I know it's why we want the law to actually be changed, because it's much harder to change the law once it's in place and things can move forward. It's just that this administration and a lot of companies are looking to, it's crazy. You have banks, big, large banks saying they've got to get the Clarity Act passed. Like, you got big, so I just feel like they're going to get the people that they want. If you have the big banks who have been fighting it for so long now getting behind it and they want it passed, I think it's going to be passed.
That's true. And by the way, the reason that I said that I view this as a threat rather than a present is that if you just go read the document, or if you don't want to do that, have an AI help summarize it for you, you're going to end up with this. They talked about this new product called a covered investment contract. That means, number one, there is an investment contract as determined by the Howey test. Number two, a crypto asset is subject to that contract. Number three, the crypto asset itself is not a security. And number four, no other asset is wrapped in the same contract. There's issues with this because, number one, you're still using Howey, which in my opinion, it is outdated. It does not fit. So because you're using it for part of it, it means that you can absolutely go back to the interpretations of the Gary Gensler SEC and just claim that everything is a security under the Howey test, fundamentally rendering everything else after that obsolete. Number two, we're still in that phase where we don't know what is and is not a security. We have a lot of guidelines. We have some favorable stuff coming out now that just shows that a lot of stuff is not a security. In fact, it's probably commodities and collectibles and stuff like that. The only one that has definitionally shown it is not a security is Bitcoin. Everything else is up for interpretation at this point. I will fact check myself on that, but I have been following this pretty close, and that is what I believe.
Yeah, no, I mean the way I'm looking, and just for everybody, so obviously we already know that the Democrats are favored to win the next presidential election currently, just in the state that we are in, and of course they tend to be less favorable for crypto. That's been, at least that's been always the narrative, and under the Gary Gensler and the SEC, this is where, you know, Zenith is bringing up, we battled that for years, where it was just, I mean, it's fun. I keep coming back to filibustering. I mean, that's the best way you could put it. Gary Gensler filibustered the entire crypto market for years, just to kind of just to hold it off, and it would not tell it what it was. But so there's a good chance here that, you know, come 2028, when the next U.S. presidential election gets put into place, they will have that's why it's important that everyone is saying they need to get this passed now, because of the seats and how many they have also. But I did see a trend though recently, and they are starting to bring in people that are on the Democratic side that are more favorable for crypto. So it's possible that they could get this thing still passed, because they are bringing in younger, fresh people that are looking at things a little differently through a different lens than people that are stuck in the old traditional financial ways. Yes, I'm looking at oh God, who's the biggest senator? Who's the biggest one that's always talking for the banking committee? Is it Warner? Elizabeth Warren? Oh God, yeah. She is so in favor of the banks. But the thing that doesn't make any sense to me is she's so favored for the banks, yet the banks are now starting to make a U-turn and say they actually want the Clarity Act passed. So there's a lot of misdirections right now. Like, it's almost like, where does the banking committee sit when it comes to crypto?
There are some people that are on this committee that are actually pretty decently crypto. That's both sides of the aisle. Like Ruben Gallego, I'm pretty sure he's one of the pro crypto Democrats. I'm pretty sure he was actually one of the guys that did the negotiations for the ethics clause that's getting proposed for the Clarity Act. Sorry,
and I know Warner from Virginia. He's teetering. He's definitely teetering. He's one of those swings that could go for the Clarity.
True. Tom Tillis is another one, I believe. Bill Haggerty, I believe, as well. Obviously, Cynthia Loomis.
Yeah. I mean, she's touting this whole thing. She's the one driving it.
Oh yeah, for sure.
So I think that's the concern, that they're not going to get it passed, because if they don't do it now with this occurrence. But I think they've got enough going. I don't know. It's gonna be interesting. I think they'll get the votes. I think they'll get the votes to pass the filibuster. That's what I think.
If it's on the docket, I have decent confidence for it. Nothing is guaranteed, but it at least gives me confidence. I do.
Now, how does that translate to the crypto market? So let's say we're getting the bull, right? We're getting a lot of tailwinds right now, right? With the whole, the Treasury coming out was a game changer, buying back U.S. debt, and people, for those that don't understand, when they're buying more U.S. debt, it builds more confidence in the overall United States, but it also injects a lot of liquidity into the markets, where those investors who take that liquidity, they're going to put it to work. Why? Because they know fiat sucks. That's why. So they're going to put it to work, and they typically will lean more towards riskier assets, and not just that, but also assets that are that do well against the devaluing of the US dollar. This is where your gold, your silver, your crypto, and so forth come into play here. This is why crypto had gotten its big pump and get move. And of course, we talked about it. It got maybe the move exacerbated because of short sellers, getting squeezed and things like that. But ultimately, if that happens, now you get Clarity Act passed in September. That really puts, I think, not only does that put a floor in the overall market, I think that now trajectory, that definitely, if we haven't already changed, I think that now sends it definitely into its bull run, and we should see more to the upside. But don't get me confused here. If that does get passed, you will have a sell the news event. Now, how deep is that pullback? And that's to be determined. But I still think these are just more tailwinds for the crypto markets. And if it gets passed, obviously we've already talked it many times, that it's going to absolutely benefit Ethereum and tokenization, because that's one of the big things that are on that piece that people are getting hung up on, and also how stable coins can be utilized, because that's the biggest threat to the banks. I know we covered this a while back, but this is where the banks were. I think now that they've kind of worked that out, the banks are now more in favor for it, because their big concern was you can't have people holding stable coins and earning 4 or 5% yield because there's no banking products that can even come close to compete with that. So you basically, essentially, the banks are worried that you're going to have an exodus of money leaving the banking sectors. Well, the joke's on everybody else, because the banks can come out and say, well, actually, we don't have that money. We've lent it 100 times over, so we don't really have that money to give back to you to that much. It causing a run on the banks, thus, a catastrophe as far as the financial sector. So there, all these delicate pieces need to be unwind for this to happen too, because of the massive leverage that goes on in the derivatives markets, is what's happened. So yeah, you got a lot to unwind there. So they got to be real careful to let this kind of go. And that's a big one, was the stable coin. So that's how I will look at it. So I still think this is where I'm still more bullish on Ethereum than I am Bitcoin.
I hear you. By the way, when I'm still doing my research for crypto news stories, I'm still getting news stories about like X group says that if we pass the Clarity Act, stablecoin rewards is going to crater like $80 billion in bank deposits. It's like old news, bro.
It's very old news, and the banks are already fully aware of this. This is why they were so against everything. Yeah. But yeah, it's definitely an interesting times to how they're laying everything out. But if you go back and look at it, how the ETFs were brought in, see, I still feel like the ETFs were just basically the worst thing that could have happened. Everybody was in favor for the ETFs, because here's why: because those ETFs allowed traditional markets to truly manipulate the markets. Without that, you still had an organic market, to where you couldn't use all these financial tools to necessarily suppress prices or to do all the things that they're doing now. With whether it's good or bad, they can manipulate a lot because of the small market cap, and with these tools. They couldn't do it until these tools really got put in place.
Very true. By the way, before we get out of here today, I do have one other thing. I know I've been teasing it the whole time, but this is technically breaking news because it came in at 8 p.m. Eastern time, and we try to go live at 9 p.m. Eastern time. From the Federal Reserve Bank of Kansas City. Oh, what do we have here? Oh, the Jackson Hole Economic Policy Symposium. Financial Innovation, Implications for Payments and Policy. Okay, what do we got? Well, up first, Friday session, we have Kirsten Forbes. Opening remarks. First one, financial innovation and the international monetary system. Okay. What's the innovation that's been going on lately? I would argue it's crypto. Okay. Innovation in tokenized finance. That's definitely crypto.
Mm-hmm.
International experience with payments innovations. Again, definitely seems crypto related. Saturday, financial innovation in the future of banking. Again, what have we been talking about? Banks are messing with blockchain. There you go. And then again, financing innovation. Financial innovation, considerations for central banking. Oh, that definitely ties into the crypto stuff, because when central banking are the ones that are fighting the Clarity Act. Do not get that mistaken for a second. Those are the people fighting it. They have appeared to have capitulated, meaning they have a plan to deal with crypto, whether they're getting in on it or trying to shut it out. And it appears, based on kind of the way winds are blowing, they're probably going to try to get in on it. And there you go. That is it. Let's see. I think I have a little bit of analysis, but at a glance, would you say this is a crypto weekend or no crypto weekend?
I mean, definitely Jackson Hole is going to be definitely talking about tokenization and the benefits of how can crypto, blockchain, and tokenization, how can that help the financial industry move into the, catch up with the rest of the world, since it's such an outdated, systems of how they run on. Keep in mind, most of the United States systems around the world, they're running on the SWIFT network. SWIFT network has been around for a long time.
That's true. By the way, I got a little bit of tidbits here for you. So as far as where crypto sits on this panel, we're looking at two panels very specifically, are actually staffed by institutions that have spent time writing about the stablecoin treasury demand, tokenized deposits, and whether programmable money belongs inside what they're proposing as a two-tier banking system. So these are academics and professionals that have extensively been involved in this stuff. They're on two separate panels, the ones that we pointed out Friday and Saturday. As far as other folks, Edward Prasad of Cornell is on the Financial Innovation and International Monetary System. He wrote The Future of Money and recently worked tokenized treasuries and digital safe assets. Christine Parler from UC Berkeley is also on Financial Innovation and the Future of Banking. She is one of the main academic voices on DeFi, automated market makers, liquid staking, and how crypto market structure interacts with TradFi banking and payments. And then lastly, we have Marcus Brunemeyer from Princeton on financial innovation. He's a long record on Bitcoin, on blockchain economics, digital money, platform currencies, and central bank digital currencies. Kind of all the hot topics that we've been covering for the last year. So I'm excited to see what comes out of it.
I just think everything's in favor. I think everything's getting teed up. That's what it feels like. Everything's getting teed up. All the major players have the big market makers have got their bags pumped. They're ready to go. You've got the Clarity Act that's probably going to get passed. You have Jackson Hole talking about the forefront where they're going to go. It's heavily tech crypto. It just feels like everything's teed up for it.
There you go.
Banks have capitulated. I mean, yeah.
There you go. And by the way, we will be keeping track of all of the latest and greatest going on with that. And the place where you can get the most up-to-date information from us is over inside the private Telegram. If you want to get there, you can hop in by going to walktheblockndf.com, finding the membership tab, and from there, you can get signed up for it. It is on Telegram, so you got to have an account there. But inside of there, you're going to find the ongoing chat where we post pretty much all of our research that we do for the shows, technical analysis, looking at new tokens and stuff. Yes, I'm looking at you, Adalberto Z3D. Don't know what that token is. Please be very, very careful with any pre-sales or token launches. They're kind of known to be the most precarious time for it. Anyways, we talk about all that stuff inside the private Telegram. So if you want the latest and greatest, that is where you can find it, along with exclusive live streams and the entire archive of all the live streams that we've done in the past. If you got a question, we'll answer it. It's kind of what we do. So from these parts, we like to say the waters get rough, so don't sail through them alone. Come join us as we navigate digital finance together, private mentorship, exclusive live streams, and Q&A. Go from beginner to intermediate to expert with us. We all work together. We can all win together. Alrighty, Tracker, that does bring us to the close of the show. Any final thoughts before we get out of here? What are you really paying attention to for the next week?
I mean, honestly, it's going to be the price action. That's what I think everyone's going to be watching closely, is the price action with ETH and BTC. Are they going to stall out here? Are they going to retrace? If so, where are they going to retrace? How quick is the retracement? How quick does it get picked back up again? Do we make next leg up? So that's going to tell us a lot about this move, because everybody's on their so many people sidelined right now that are hoping this thing can pull back a lot further than where it is now. There are probably a lot of people out there, and not just that, there's some big crypto influencers that I went out there, and I just, because I've been hearing a lot of crypto influencers, I've been watching some of them, but they're all expecting a next leg down. Everybody is just, most people are expecting a leg down. I'm not in that camp. I think I've been very clear I haven't been in that camp, but because I just don't, Max Payne, why are you going to let the price get down to these low levels, right? So I think, everybody's on pins and needles to see if that happens. If we don't get a big, strong retracement back down, which I don't think you're going to have a lot of people freaking out, and they're going to have a lot of people, there's going to be a lot of backpedaling, a lot of backpedaling going on. But if we break out if we do hit a next leg up and we get to these, those levels we talked about for ETH and BTC, I think, yeah, you've got to start really turning your, viewpoints around from being bearish to bullish. I can tell you there's definitely an appetite for it, because just from like the little moves that we've had some big movements in the altcoins. I know you brought up the whole Hyperliquid, and of course that has just spiked. It's basically, since it's low when it pulled back at the end of July, just from the beginning of August, it's basically pulled a 2x on Hyperliquid on a lot of the news, because of the article you were reading. I know that when the administration was talking about it, so it's pumped pretty good. I still think I'm in the camp. I'm watching the price action really closely. I'm definitely watching all the activity on the Pulse chain ecosystem. There's a lot of activity happening there. There's a lot of coins that are making some big moves. We're seeing some pullbacks, but we're going to see, is this continuation? Does it peter out? We're watching the amount of flows coming in. I'm watching mainly the Pulse chain and those two big, Ethereum and Bitcoin. Those are my big things I'm watching right now, because there's so much action happening there.
Yeah, I think I'm there with you. I'm definitely going to be, I think the next 24 hours is going to be a critical point for Bitcoin because at the current way it's going right now, if it can really close and create a new high and keep this trend going, I think that we're right on that 50-week moving average. Haven't broken it yet, touched it, haven't gotten through it. So that's going to be a big one. If you can get a full confirmation above it, that would be something else entirely. But that's a full 7 days away. So maybe next week we can have a confirmation for it. But till then, just got to wait and see. Again, that 83,000 level is a critical level for me. As far as the 886 level in the Fibonacci, that's what I'm looking for the next 24 hours. We started above it. If we can close pretty much above $81,000 or like 80,500, that's really going to be the ticket. And if you're into the Fibonacci stuff, the 886 is a pretty important level about trends and continuation. So if it closes above that, that's where I think that breaking that 83,000 possibility becomes a lot more real. Not saying it's guaranteed, but pretty likely.
Just a shout out to the members that are in our Telegram, just to say we had a really good video we recorded out there for you guys on Tuesday. If you haven't seen it, go out there and check it out. We dove into a lot of stuff, more around the tokens we're watching and what's happening on some of the price actions. We'll keep doing those. We're going to probably be doing live streams at least once a week to be diving into things because, like I said, there's a lot of nice price action happening. We're not going to be talking about those coins here, but I mean, in the time we are having some fun with some telegrams. You are getting some degen stuff happening where for those that really want to see X's and see some returns, we are definitely seeing it.
That's true. I would like to do a future altcoin roundup talking about where all the altcoins are standing as we look toward this next bull market. Because
there's a lot, man.
Yeah. Realistically, there are some winners, there's some losers. Things are born, things die. It's kind of just what happens in the crypto space. And yeah, it's dog years. Macroeconomics are long, crypto's fast. It's kind of one of the reasons we like it a little bit.
Yeah, we're seeing it. Like I said, you're seeing some big X's, man. You're seeing some pretty X's happening right now. But I guess these are off just surprise presses. But I guess what I'm saying is what we've been telling a lot of members is, figure out those altcoins that you like, and if you have to just start putting, put a little bit, dry powder down into some of these various ones, even at these levels now, they don't even have to get back a third of what they've gone down. You're still going to reap massive rewards because the fact that they're so suppressed, but it's finding those right projects. Like which ones are really good in the GameFi sectors, which ones are the good funds in the game and the GambleFi sectors. The other areas and people don't understand. People don't understand when you get into crypto, it's gotten so big. There are so many different sectors now that there's probably pushing close to 100, 150 different sectors that all coins can fall under. And you got to understand what those mean and what they are, and then what's in vogue. And then you got to understand things like, okay, what did well last cycle? Okay. And then what might I do? And if it's now the third cycle for these coins, are they going to get the third year curse? Are they going to get muted? Or is that going to happen? So there's so many. To pick the right ones to get in is very difficult, but at these suppressed prices, you don't necessarily have to pick the biggest winners because they're so suppressed. So there's a lot of things like that we're talking with the members on, and getting that shopping list ready, get your price targets ready, get your sell prices, where your prices are going to be. There's a lot of stuff like right now you need to hurry up and get your shopping list and get your orders in place of what you're going to do, because you do not want to be making emotional decisions on when you're going to either take profits, what you're going to buy, what levels you're going to get in. You don't do that on the fly. You do all your homework first, and you lay it out like and you lay out basically your idiot's guide. This is what I got to do. I'm ready to go. And when those prices happen, you just do what you've already told yourself you're going to do. So a lot of that stuff we're going to get into too, and diving in some of the security options in DeFi too, of course, because there's a lot of cool tools out there now.
Yeah. Well said, sir. We definitely cover all that. We've probably talked about a lot of that already, but we will be updating it as time moves forward. So that way, what was the name of the cold wallet that got hacked? The one that no one's ever heard of?
Oh, it's not Cold Wallet, is it? Is that what it was? Cold Wallet?
It might be cold something. Anyways, the point is the information, it changes. We keep it up to date. So the old stuff is good. The new stuff's better though. Alrighty, ladies and gentlemen, that is all we got for you here tonight. We will catch you guys again next week, 9 p.m. Eastern time on Thursday for the free stream here on YouTube. And we'll catch all you guys in the private Telegram very soon. I got some fun links I'm going to be posting about social media metrics and how you can measure them. So that is what we got going on. Anyways, folks, his name's Tracker. I am Zenith. We'll catch you guys next time. Until then, I hope you all have a fantastic weekend. Good night.